Stop what you're doing and listen closely because something just happened in Alaska that most people are going to ignore until it is too late. A U.S. state has just told the Federal Reserve, in effect, we want another option. Gold and silver, real physical hard money, have now been recognized as legal tender in Alaska. And while the mainstream financial world is treating this like a small political headline, the people who understand money, debt, inflation, and history are seeing something very different. They are seeing the beginning of a shift. Because this is not just about Alaska, this is not just about coins. And this is definitely not just some symbolic law that disappears after one news cycle. This is about trust. Trust in the dollar. Trust in the banking system. Trust in the Federal Reserve. Trust in the idea that the paper sitting in your bank account will still buy the same amount of food, gas, housing, medicine, and security 5 or 10 years from now. And the uncomfortable truth is that more and more people, more institutions, more governments, and now more states are starting to ask the same question. What happens if that trust breaks? That is why this story matters. Alaska's legislature passed a bill recognizing gold and silver coins as legal tender inside the state. Not Bitcoin, not some new digital dollar, not another government-backed payment app. Gold and silver, the same hard assets human beings have trusted for thousands of years when paper promises failed. Most people will hear that and shrug. They will say, okay, interesting, but what does that have to do with me? And that right there is the mindset that gets people financially blindsided. Because the biggest monetary shifts in history never feel obvious at the beginning. They feel small, they feel strange, they feel easy to dismiss. And then one day, everyone looks back and says, how did we not see it coming? Think about what it actually takes for a state government to make a move like this. Politicians do not usually take bold monetary positions unless something is pushing them. They do not wake up randomly and decide to put legal weight behind gold and silver. So the real question is not just what did Alaska do? The real question is what are they seeing? What do they understand about inflation, debt, federal spending, the dollar, and the long-term direction of the economy that made them say, we need a backup plan? And that is where this gets serious, because Alaska is not alone. Across the country, more states have been looking at sound money bills, gold and silver legislation, state bullion reserves, and ways to reduce dependence on a financial system that feels more fragile every year. Utah has moved in this direction. Texas has moved in this direction. Wyoming, Missouri, South Carolina, and others have all been part of this broader conversation. But Alaska crossing from idea into law changes the psychology. It tells every other state watching from the sidelines that this is no longer theory. It can be done. And once one state does it, the next state has cover. Then the next, then the next. And suddenly, what looked like a fringe issue starts to become a movement. That is how big changes usually happen. Slowly, then all at once, one legal domino falls, then another. Then markets start paying attention. Then institutions start repositioning. And by the time the average person sees the headline, the smart money has already moved. The part most people miss is that gold does not rise simply because people like shiny metal. Gold rises when trust in paper money falls. Every time a government, a central bank, or a major institution signals that it wants exposure to gold, it is also quietly signaling that it wants protection from something else. Protection from inflation. Protection from debt. Protection from currency weakness. Protection from a system that can create money with a keystroke and call it policy. And look at the world right now. The United States is carrying a massive debt load. Interest costs are exploding. The Federal Reserve is trapped between fighting inflation and protecting an economy addicted to cheap money. If rates stay high, debt becomes more painful. If rates get cut too aggressively, inflation can come roaring back. There is no clean exit. There is no magic number where everything suddenly becomes fine. The Fed is choosing between different types of pain. And ordinary people are usually the ones who pay the bill through higher prices, weaker purchasing power, and financial uncertainty. That is why Alaska's move matters so much. It is not because everyone is suddenly going to walk into a grocery store with silver coins tomorrow. That is not the point. The point is psychological. The point is legal. The point is that a state inside the United States just said gold and silver deserve a place back inside the money conversation. And once that idea re-enters the system, it is very hard to put it back in the box. Now ask yourself this. What happens if Texas does something similar? Texas already has energy, scale, independence, and a state-level gold infrastructure. What happens if a state with that kind of economic weight pushes harder into gold and silver? What happens if 5 states do it? What happens if 10 states do it? What happens when international investors look at America and see that even states inside the United States are hedging against the dollar system? That is not a small signal. That is a warning flare. And while this is happening at the state level, central banks around the world have been loading up on gold. They are not doing that because gold pays a dividend. It does not. They are not doing it because gold is exciting. It is not. They are doing it because gold is nobody else's liability. A dollar is a promise. A bond is a promise. A bank deposit is a promise. Gold is not a promise. Gold just is. And in a world where promises are getting harder to trust, that matters. This is also why silver could become one of the most interesting assets in this entire story. Gold is the monetary anchor, but silver has something extra. It has monetary demand and industrial demand. It is used in solar, electronics, medical technology, and countless applications that keep expanding. And the silver market is small, very small compared to the ocean of global paper assets. So when money starts moving into silver seriously, the price does not always move politely. It can move violently. It can wake up after years of doing nothing and then make the people who waited feel like they missed the train overnight. But let me be clear. This does not mean gold and silver are guaranteed to go straight up. They are not magic. They can fall. They can move sideways. They do not pay interest. They require storage. They can test your patience for years before suddenly doing exactly what they were supposed to do. The point is not that hard assets are risk-free. The point is that having no protection in a world this unstable may be the bigger risk. Because if you own some gold and silver and the dollar stays strong, maybe you underperform a little. Maybe you miss some upside somewhere else. That is survivable. But if you own none, if everything you have is tied to dollar-denominated paper assets and the dollar goes through a real credibility crisis, that is a very different kind of pain. That is the kind of pain that destroys savings, damages retirements, and forces people to learn monetary history after the damage is already done. This is the part that matters most. The system we live under is not permanent. The Federal Reserve System, the dollar reserve system, the current global monetary order, these are human constructions. They can change. They have changed before. The gold standard changed. Bretton Woods changed. The petrodollar era is being challenged. Every major monetary system in history eventually gets restructured, replaced, or forced to adapt. And during those transitions, there are always people who prepare early and people who explain later why they did nothing. Alaska just gave you a signal, not a guarantee, not a panic button, a signal. A state government looked at the same debt, the same inflation, the same monetary pressure, the same global shift, and said, we want something real in the system again. You can ignore that. Most people will. You can laugh at it. Many people will. Or you can ask the more useful question. What if this is not the end of the story? What if this is the beginning? Because the window to prepare for a monetary shift never feels urgent until it closes. When gold and silver are quiet, people call them boring. When they start moving, people say they are too expensive. When they explode, people say they wish they had bought earlier. That cycle has repeated over and over throughout history because human nature does not change. People wait for permission. They wait for headlines. They wait until everyone agrees. But by the time everyone agrees, the opportunity has usually already moved. Most people will not see it until the headlines tell them to see it. But by then, the people who understood the signal early will already be positioned. Alaska just drew a line in the sand. They looked at the paper system and said, we want something real. Now the question is, what are you going to do with that information before everyone else realizes what it means?